Welcome back to Quantreef.com. XRP is trading right around 1.0858, sitting in a tight pocket that's worth paying attention to. In the next few minutes we'll walk through liquidity, support and resistance, VWAP, Fibonacci, fair value gaps, positioning, and what the most probable path looks like over the next several hours. Let's get into the chart. Price is at 1.0858, and structurally this reads mixed rather than clearly trending. The trend and structure layer sits around 63, which leans constructive, but order flow and liquidity is weaker near 46, and statistical volatility is soft at 32. That combination tells you price is chopping inside a range rather than driving with conviction. Neither buyers nor sellers have firmly taken control yet, and the tight fib range between 1.05 and 1.09 confirms that. Price at 1.0858 is trading just below the session VWAP near 1.08, but comfortably above both anchored VWAPs from the recent swing high and swing low, which sit close together around 1.07. That clustering means the market has been building value a touch beneath current price, and holding above that anchored zone is generally a sign buyers are willing to defend recent gains rather than give them straight back. The liquidation map is essentially balanced right now, 50-50 between the two sides. The upside pool sits near 1.096, less than 1% away, with roughly 30.6 billion in resting notional. That's the strongest wall on the board. The downside pool is near 1.051, about 3% away, with a very similar size behind it. Markets tend to drift toward the nearer, larger pool first because that's where stops and liquidations cluster, so the 1.096 zone is the more immediate magnet, with 1.051 as the deeper alternative if sentiment flips. On the panel right now, resistance above starts with target 1 at 1.1023, then target 2 at 1.1301, and target 3 up at 1.1569. Below price, support sits at the 1H swing low of 1.0776, with the stop-loss level marked at 1.07. A move toward target 1 looks like the more likely first test given proximity, while losing the 1H swing low would be the signal that invalidates the bullish read and opens the door toward that stop zone. Above price there are 2 for H bearish gaps stacked between 1.096 and 1.104. and again from 1.113 up to 1.132, both fully unfilled and classic magnet territory given how often these get revisited. There's also a daily gap way up near 1.2, but that's a longer horizon story. Below, the daily gap between 1.071 and 1.096 is almost entirely filled already, while a smaller for H bullish gap near 1.062 to 1.077 remains mostly open and could get tagged on any dip. The swing here runs from a low of 1.0467 to a high of 1.0949, and price is sitting inside that range, close to the 0.382 retracement near 1.0765. That level lines up closely with the 1H swing low support, which is a decent confluence signal. If price pushes higher, the 1.272 extension near 1.108 and the 1.618 extension near 1.125 become the next fib-based targets worth watching. Layer by layer, this is a genuinely mixed picture. Trend and structure at 63 and institutional positioning at 72 lean bullish, and behavioral sentiment at 71 agrees. But order flow and liquidity at under 46 and statistical volatility at just 32 pull the other way, suggesting thin conviction and choppy price action beneath the surface. Macro sits dead neutral at 50. When you average that spread out, the setup grades as neutral overall, not because nothing's happening, but because the layers genuinely disagree with each other right now. Retail traders are heavily long here at 71.68%, and interestingly the top accounts are even more long at 74.99%, though top trader position size skews a bit lower at 62.51%. The for H taker flow shows 53.5% long versus 46.5% short, with about 0.13 billion in long dollar volume against 0.11 billion short. With everyone leaning long together, a squeeze risk actually favors a downside flush that clears out crowded longs before any real move higher. Given the balance on the heat map and the nearby unfilled gaps above, the 1.096 wall and the target 1 level at 1.1023 look like the more probable near-term draw. Reach odds put a 12-hour test near 56% likely. If buyers clear that zone, the gap up toward 1.132 becomes the next stop. If sellers defend it instead, look for a slide back toward the 1.0776 swing low and possibly the 1.051 pull, though that's a lower probability move over the next day. Remember, XRP largely follows Bitcoin's own liquidity flow, so any Bitcoin sweep can override this setup entirely. Checking Bitcoin structure first is worth the extra 30 seconds before acting on either side here. The bullish case leans on holding above the 1.0776 support and the anchored VWAP zone, with confirmation coming from a clean push through 1.096 and target 1. Invalidation sits back at the stop loss near 1.07. The bearish case is a fade of a sweep into the 1.096 wall, entry documented around 1.096 with stop at 1.13, though no target ladder is published for that short this cycle, so that side stays untested on paper. The long setup does carry targets near 1.084, 1.087, and 1.0873 off an entry near 1.051. So XRP sits right at a decision point between that 1.096 wall and the 1.0776 support, and whichever side gives up its liquidity first likely dictates the next real leg. If this kind of layered read is useful, give the video a like and subscribe for the next one. Quantreef.com runs this same 9-layer structure, probability, and liquidity breakdown across more than 100 coins, and there's a 7-day trial if you want to dig deeper. As always, this is for educational purposes only and isn't financial advice.